All right, so here we are closing day number 4 in the simulator, and we finally found some action today, which is great. I feel like I've been rewarded finally for my patience over the last couple days, and I've had to remain patient throughout some practice trades that went really well. So I had to watch myself, not make any dollars in this account or whatever simulated dollars. And I feel really good about that. I can't remember the last time I've been so stoked about a $74 winner or, a 3.5% gain on what are basically two small scalps. But just with how dead the market's been so far, or lately rather, I mean, I'm really excited about this. So we'll take a look at the two trades I did take. And given that I only took two, I think I'll be able to fit in a pretty deep amount of analysis. Now, before I get into the trades, I'm just going to point out that once again today I woke up earlier than I wanted to. I had a headache last night that was crippling. I really can't stress how bad my head felt last night. And I went to bed basically clutching my brain in pain. And when I woke up, it was initially better. And then in the first hour and a half where I was awake this morning, that headache started to return. And so I went for a walk outside, got some fresh air by the beach, and just tried to do a couple things to try and get back in the zone. And even with that, even though that did help a little bit, and eating a bigger breakfast than I would normally have on a trade day, that also helped a little bit, but I still don't feel 100%. So that's pretty noteworthy here because it led to a mistake. It led to me initially overlooking VIVE. I had opened up the stats on it, and I had seen 440 million shares of a float, and I was like, well, that's a joke. So I just immediately ignored VIVE. And, especially considering that I looked over at the daily chart and just saw red everywhere, I was like, this sucks. Okay, that's not on the list. And then I started looking at OCGN, CHFS, and SPI as possibilities for low float runners, even though there weren't exactly huge headlines and there was almost no volume in any of them pre-market. Now, long story short, about 20 minutes before the bell, it occurred to me, wait a minute, that's not 440 million, that's 440,000. And then I thought, oh shit, now I have to do all this research all of a sudden. And, long story short, once again, I did figure out what was going on with VIVE. And so that became my primary focus going into the day. Now, the beginning of the day is something that isn't really illustrated all that clearly by these 1-minute candles. I came into this today with an attitude of wanting to sit back and wait. I wasn't super confident about VIVE because I thought that it would be overcrowded, just given the fact that there's been such a lack of momentum in the market lately. I thought that there would be some serious tugs of war going on in the first couple of minutes, and I didn't want to get chopped up by any of that. And I was proven correct very quickly. I mean, you can see by these first few candles, a lot of them are dojis, a lot of them are topping tails. This first one in particular was extra bad. It opened at 555, shot up to a high of 83, and then got quickly rejected back down into the 50s. And that kind of worried me. I thought at that point that there's a really good chance that this is just going to be a no trades day once again, despite the fact that this is a micro float stock and that people are trading it. Now, to sum it up, my first trade was a really sloppy one in my opinion. I started out with a stop of 550, and I had planned to move that stop up pretty quickly. Because I was playing off a 1-minute chart, I continuously moved my stop up with the low of the previous candle. Now, my initial entry was what I was looking for was a break of this candle here at 574, and you can see I took that at exactly 574, but I only took 125 shares, and that's sort of a reflection of how unsure I was. The swings on this were very quick and very extreme. Like it was just whipping back and forth in what I thought was a difficult to predict pattern. So I didn't want to get heavy on this below $6. I would have rather, play more of a 5-minute pattern instead of a 1-minute, even though I was basing my initial entry off the 1-minute. So to sum it up here, I took my initial entry of 125 shares at 74 on this next candle. There was a little bit more clear volume, and it closed as a topping tail, but at the time that I took my second entry, it was a long body, and I thought that we were going to continue surging up towards $6. That didn't happen until the following candle right here, which is where I took another entry at $5.95, anticipating the break of $6. Now, on this candle, once again, the story is not illustrated within this candle. This is a long body. It looks really strong. It's high of day volume. It's a high of day breakout, and it altogether looks really good. But what really happened was it was bouncing repeatedly off $6. In between $5.90 and $6, it was just kind of like spazzing out between those two levels. And it looked to me like that might be a trigger for a reversal. So I ended up taking half my position off the table only 11 seconds after my last add-on. And this really illustrates the indecision that I was feeling about the situation. And, like I said, I was moving my stop up. So at this point, my stop had actually moved up to $5.90, which once again is not really shown on this candle. So let's get rid of this line here. At the time that I had taken this half the position off the table, I'd moved my stop up to $5.90 because that's where the support was, and you'll see that later in the price action and on the chart in a minute. Now, I had tried several times after I got rid of half my position at $5.95. I wanted to see a very strong breakout above $6 in order to maybe add those shares back or maybe just exit the position altogether. Now, my stop at $5.90 I was treating that as a hard stop. I was not going to let it go all the way back down to the bottom of the last candle. My average entry on this, 1 second here, was 581.64. So even if I'd stopped out at 590, I still would have had a green trade. It just would have been a matter of how much. And I knew by that point it wasn't going to be a huge winner unless it exploded through the $6 level. Now, when it did break through $6 on this candle here, it bounced off 610 very quickly. And again, there was some really spazzy action being seen on the tape. It was really hard to read, and I really didn't like it. I tried to get out multiple times in between 6 and 610, and all those orders failed to fill because the action was too quick and I couldn't act fast enough. Now, as a side note, that is partially because of my internet. Normally it would take about a tenth of a second for my order to get accepted, and in this case it was taking maybe a quarter or half a second for my orders to go through, which on a stock that's moving this quickly does make a big difference. And so what ended up happening here is the price broke below my stop of 590, and I immediately exited the rest for 588 at 588. And you can see that I actually exited only 2 pennies off the bottom, which kind of is a bummer because it came right back up, came back above $10, made a little bit of a double top here at 610, and that was the level that I was looking at once again for my second entry. So the plan here on my second trade, where as soon as I exited, I was up $17 or something on this trade here, and I wasn't too impressed with that. I knew I could have done better, and I wasn't super happy about the number of orders that it took for me to take a 280 share position. I mean, you'll see in a minute when I show my trade log that I spent $9.75 in commissions on what was a $25 or $27 gross P&L. So I basically deleted 33% of my profit by the number of entries and exits that I had. So what I was looking at here was a risk level of 586. And initially, for my first entry, I just wanted to see $6 get broken again. Once we pulled back and closed red on this candle, I thought, okay, well, if we can get a good surge coming up through $6, then I'm going to get back in. And that's exactly what I did. You can see here, 125 shares at the first level above $6 at 601. And once again, we moved up to 610 and pulled back a little bit. And that's when I said, okay, 610 is clearly the level where I'm going to take my second entry. And that's what I tried to do. But as you can see on this volume spike here, I mean, well, you can't see it, but this was a really intense candle. There was a lot of whippy price action again. Tug of wars were really starting to show up. I mean, bid support was coming in the whole way up this candle, and yet it would flush through them very violently, and I didn't like that at all. And I very quickly adjusted my stop up to I believe it was 591 where the support was at that time. And this entry here at 617, this was me trying to get in at 611, which goes to show you just how fast this was moving. I punched it the second I saw 610 break, and I got filled at 617. Now, a quick little side note here. I'm going to open up my hotkey window, which I don't think I've done yet, and I'll show you how I'm entering these trades. Okay, this was the one that I used. So the command is buy 125 at the ask price plus 2. So that means that this order was put in at 615 at the lowest, which means that it I thought, at the moment that I was hitting the key, I thought I was looking at 611, but the price was moving so quickly that it was actually 615. And that kind of gives an idea of how, what a frenzy the situation was. And I tend to be very weak at those situations. I'm not good at super fast movers like that. And that kind of made me a little bit nervous. And it kind of messed up my risk plan on this, because it brought my average entry up to 609 instead of the 604 or so that I had planned. Because once I took my second entry, then I moved my stop up to the I guess it was already at the 591 level. So in any case, this pretty much skyrocketed up, but it did so in a very choppy motion. And when I saw the bounce, the first bounce off 635, I was like, nope, right away. That's one thing that I did extremely well in this trade, was read the tape and the level 2. I saw the way that it had moved up to 35, and I was comfortable with that. And at that time, on the way up, I was thinking, okay, here we go to the $0.50. And I was thinking about adding again. And in a matter of probably maybe 40% of 1 second, I figured out that it was time to exit just below 35. And because of my reaction time on that, I ended up getting a flawless fill. This is a top tick up here. And you can see I exited the whole position. I didn't sell half and try to hold the rest. I saw, okay, this is where we're going to reverse. And I just ditched the whole thing, wanting to take a step back from the situation and just kind of cool my emotions down, because I was starting to feel, my heart was beating a little bit quickly, and I was starting to feel uncomfortable. And I don't want to be in a trade where I feel uncomfortable, especially given the fact that, I'm pretty rusty, and, the market's been choppy and this and that. So you can see the top of this candle is 635, and I exited at 634. In my opinion, that's a flawless exit. And even though on the next candle, it did end up continuing up to 644, it didn't do that before going all the way back down to 621. And so I'm happy to have been able to have the presence of mind and the reaction time to get the exit that I did get. And I ended up booking, not a bad winner. I consider both of these trades to be what I call profitable failures. That is, they didn't give me the move that I was hoping for. I was hoping to, build these up to be 500 or 750 share positions, and I never got there. And I didn't get there because I didn't like what I saw. And so I adjusted my plan on both these trades, and as a result, I ended up with two mediocre or small scalps, which added up to a day that was, a 3.5% return on equity, which that's nothing to sneeze at. I mean, if you make 3% a day, you're going to make a lot of money in a year. And so overall, if I were to look back on this day now, I think I did great. If I, keep moving this 1 minute chart forward here, you'll see what I was talking about at 591. Now, this was the initial reaction that sent it up to into the 40s. But then after that, I didn't even think about getting back in this. I kind of felt like the bounce off 35 was a sign that it was going to reverse. And the bounce point ended up being 644. But you can see this rejection here. This, to me, was the start of pretty much being done for the day. It was once 591 broke, that's when I thought, okay, this thing is done. It's cooked, and it's probably going really far back down. Now, there was a time right here where I was thinking about getting in above 615, but I decided against it. I wanted to see serious volume confirmation. And as you can see down here on the volume bar, that never happened. And, long story short, if we zoom out a little bit, you can see it even more clearly on the 5-minute. But these two flush outs, I mean, this to me signified the end of the day on this stock. And, as I've been writing this, it's taken me probably half an hour to make this video. You can see that it made 2 bear flags. One of them's a little hidden in this 5-minute, in these 5-minute candles. But then it made a really significant one here. And this rejection is super harsh. And as I'm speaking right now, we're in the middle of what's probably going to turn out to be another long body red candle. And this stock has been long done, in my opinion. I'm not touching it, certainly not with this account. I might play around with some practice trades on it later on if things get better. But more than anything, coming off of these trades, I'm looking for sympathy momentum in the rest of the market. CFMS is one of the ones that had made a bit of a move, and I think that is a reaction to just the fact that we've had at least a little bit of a pop on VIVE. So here's a look at my trade log for October. Obviously, there's not a whole lot to report right now. I only have 2 trades, but these are the all the numbers put together, the average entries, average exits, if you want to take a look at that. What I'm going to be focusing on until there's more data here, because you can see a lot of these fields up here, they can't do the math. There's no red trades to go off. So I'm going to instead mostly focus on just all my trades put together. So this is a breakdown of all my stats in the 10 trades I've taken in this account so far. And, we're getting better. I'll also show the daily results, which I think is what shows the most improvement. You can see my accuracy. That's what I'm paying the most attention to right now. And this to me is a good sign. My first day was a disaster with 33% accuracy and a horrible P&L. Even though I recovered some of it, that was a very, very sloppy day. And since then, my accuracy has been getting better, almost like in a straight line, like bell curve style. And, from 33 to 50 to 66 and now 100%, even though I'm cutting this day off a little bit prematurely, I'm happy with the result, and that's what counts. I'm satisfied. I'm not going to overstay my welcome, as is sometimes said. And it's worth noting that, my positions were really small today. The value of my 2 trades, if I switch back to my trade log here, you can see the 2 trades from today were only $1,628 and $1,522 positions. So I didn't even use margin on these trades today. I was only using my cash balance. And part of that is a reflection of sort of my iffy feelings about VIVE. But it's also part of, my need, my mental and emotional need to not go too far into the red, to not have big losers yet anyway. Once I have a profit cushion, it's a different story. I'll be willing to take a lot more risk, and I'll be using to max out my margin as I have been in my practice trades. But for now, I want to play it really close to the vest and only get involved in situations where I feel very confident. And, I think my accuracy is a reflection of patience is increasing in the way that I'm playing this account. And that's a great sign to me. Now, one thing I'll note real quickly here is that I'm simulating the same account fees that I dealt with SureTrader. The level of data that I have in my Dash Trader account right now, which is the same platform that SureTrader uses, the level of data I have would cost $124 US per month if I did it with SureTrader. So that's what I'm simulating here. And I'm also simulating the SureTrader fee charge date, which is the 4th of each month. So my fees for September are going to be charged on October 4th. So on October 4th, I will be removing $124 from my account, and you'll see that when it happens. And that's also part of the reason we haven't gotten into all the elements of these trackers yet, but that's also part of the reason why I have this column here. You'll see over time my account fees will be removed. And there is also another purpose to that column that I won't get into right now. But So far, my feeling in this account, I'm really happy with what I'm doing. My accuracy has improved a little bit. And the P&L is still not where I want it to be. The commissions, the relative commissions, are still very high. I've had some disastrous trades, etc. And but at the same time, I have to be comfortable with the progress that I've made. I mean, this is my third green day in a row in a market that has been really choppy, and sometimes you just have to take the bright side. I'm somebody who you'll find is always focusing on the negative, and people criticize me for that all the time. They say, why are you always so bummed out? Why are you so hard on yourself? And, you never look at the positive side. And my answer to that is just, you don't need to fix the positive. Getting good at something is about plugging leaks and getting better at the weak spots. And that's why I always focus on the negative. But right now, I think I really need to be happy with my progress in this account. And I am. So I'm going to look to continue being patient and continue looking for the types of setups that I have the biggest accuracy on. And I certainly want to continue this streak and continue building my cushion. So that's it for today. And hopefully I'll have some more good news to report tomorrow.